Watch this video to the very end. I'm going to give you my 7 secrets on how to find the best mortgage rate. The first thing you need to know is you need to know the details about your file. If you're shopping around for a rate, you want to make sure that you understand these 9 important factors that will determine the pricing on your interest rate. Number 1 is going to be your FICO score. And this is the FICO score that your lender is pulling, not what you see on Credit Karma or Credit Sesame or any of those public websites. Remember, those scores are going to be at least 50 or so points higher than what the actual score is from your mortgage lender. So you want to make sure that your lender pulls your credit. You're also going to need to know your LTV or your loan to value, and you can figure that out by knowing your sales price and how much money you're putting down, whether you're using FHA or conventional financing, even if you're looking in the jumbo space or maybe even a VA loan as well. You have to know your loan type. You also need to know what type of property are you buying, whether it's a single family home, condo, townhome, or high rise. And also, what is the occupancy? Is it your primary residence? Is it a vacation home? Is it an investment property? And also, are you locking on a 30-day lock or 60 or 90 days, or perhaps even longer than that? All of these factors make up what your interest rate will be, so make sure you get a good idea of what all these numbers are before you start shopping around for your rate. And by the way, if we haven't met before, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're thinking of buying your first home, buying a vacation home, or building your rental real estate portfolio, we've got you covered all across the country. And make sure you hit the description below for links to more information on how to get your mortgage right. And if you ever need a second opinion on your home loan, whether it's your purchase or refinance, you can send me an email and I'd be happy to do a free no-cost analysis and make sure that you are getting the best deal on your home loan. And I want to give a special shout out to our commenter of the week, Abel Santana. Abel had a quick question. I'm currently looking into a cash out refinance on my rental property. My interest rate is 2.875%. Abel, that is an amazing interest rate, so congratulations to you for locking that in. I have about $115,000 of equity in my property. If I do the refi, my rate would go up to 6.75%. That's a big jump, about double the mortgage, and I'd still be cash flowing. I want to use the refi to buy other rental properties. What are your thoughts? I was told I couldn't do a HELOC since it's a rental property. Abel, great question, and that is something that more and more of you have been asking. So if you guys do have questions, don't forget, send them over to me. I'm happy to look at these estimates for you guys and make sure that you're getting the right deal. But Abel, in your situation, I would definitely look at the HELOC. And the only reason is because that 2.875%, I don't know when you will ever be able to lock that in. And I have a few of my properties that are locked in under 3, and I would definitely look at a HELOC. I know it's tempting to maybe possibly do the refinance, so that way you have one loan and you don't have a second mortgage. But my personal preference, I would say keep the first mortgage, and especially if you plan to buy more properties, take out the HELOC, because as you acquire more homes, you can pay down the HELOC and use that money again. If you did the cash out refinance, remember, you get one lump sum of money at the end of the closing, and that's it. You have no more money to be able to utilize. So go for the HELOC, use that money, and keep going and buying more properties. Now back into our video. Number 2, you need to shop on the same day. Interest rates change every single day, and sometimes they will even change multiple times throughout the day. So this is one thing that I would highly recommend. If you're trying to get the best rate, you have to move quick and be able to shop your lenders on the same day, because if something were to change in the market, you get quoted a rate at 4 o'clock, you don't lock in, tomorrow something else happens, you could easily lose that rate and not be able to lock it in. So you want to make sure that you are shopping on the same day with the same parameters. Make sure to give that list of 9 things that I literally just gave you. You have to give that to every lender in order for them to properly quote you an interest rate. If you leave one of those factors out, you can easily get misquoted a rate, lock in on something that maybe you're not even aware of. So make sure you have all the details and shop on the same day. Number 3, you want to get your credit score as high as possible. Ideally, over a 740 or better will typically get you the best rate possible. If your score is under a 740, remember, you can always opt to pay for points to buy the interest rate down. So I wouldn't necessarily let that be something that stands in the way from buying a home. But ideally, in a perfect scenario, if you have the ability to get your score up as high as you can, that's something you definitely want to work on. but don't let that be a reason why you're not buying. Which leads me into my fourth point, talking about buying points. If your score isn't high enough, you do have the option to buy down your interest rate. And with the way the market's shifting and sellers willing to offer credits and closing costs to help cover your out-of-pocket expenses, this is something that I would highly recommend you taking a look at when qualifying for your mortgage and making an offer on the house. Because if you can get the seller to cover a few $1,000s towards your buy down, go ahead and use that money, pay your own closing costs, get a lower interest rate so you can take advantage of the market because there's less competition out there today. And number 5, my biggest thing is looking for the right strategy. Remember, any lender out there can quote you a low interest rate, and I've told you about some of the horror stories of clients that have actually gone down that path where lenders have charged them literally tens of thousands of dollars, and my clients were completely unaware of until I pointed it out to them. So don't let that happen to you. And make sure that as you are shopping around for your interest rate, ask your lender for multiple options. They should be able to quote you at least 2 to 4 options for every product that they show you. And if they can't do that, I would recommend finding someone else to help you with your mortgage. It's very easy, again, like I mentioned, for anybody to just give you the lowest rate because all they're going to do is charge you a bunch of money. And then it's up to them whether or not they're going to tell you that they're actually doing that, or you'd have to look at the loan estimate. So make sure you look for at least 2 to 4 strategies with your loan estimate. And number 6, another option you could look for is opting for a shorter payback period. Most mortgages are quoted on a 30-year fixed rate. Traditionally, anything that's a shorter term will get you better pricing, whether it's a 20-year or even a 15-year or even a 10-year. So depending on what you can qualify for, you may want to look at a 15 or 20-year mortgage and get you a slightly better interest rate. But remember, if you take a shorter term, your payment is going to be higher. That's where you have to be prepared for that payment shock, because you might be looking at some of these websites quoting interest rates, quoting payments. They're traditionally quoting a 30-year term. If they quote you a 15-year term, your payment will most likely be higher, and you have to make sure that you can qualify for that as well. So you may not be able to pull the trigger on something like that depending on what your debt to income ratio is. And if you've made it this far and you're still watching this video and you're finding this helpful regarding your home shopping, I want you to comment below, lock my rate, so that way I know you're still watching. And if this video is helping you, or you think it might help any of your friends or family that might be shopping or even looking at a refinance, please make sure to hit the like button and share this with them, so that way I can help educate your friends as well. This brings me to my last point, number 7. In order to get you the best interest rate, you want to be able to put down a significant amount of money. Typically, if you're putting down a larger down payment, somewhere in the neighborhood of 20-30% down, you can get a better interest rate. Now, I know that may not be possible for a lot of you, but that's totally fine. That's where you can look at some of the other options, like I mentioned throughout my list, that can help you get that lower interest rate as well. So again, this isn't a perfect scenario. If you have the money to put down, you can certainly do that. But more than anything else, the stronger of the buyer that you are, the more options you have. So make sure, like I mentioned in my previous point, look for at least 2 to 4 options with your loan estimate, so that way you understand how the mortgage is going to work and how to best utilize your money, because that's the topic of this video, how to get the best interest rate. So you want to make sure that you're doing what's right for you and your family in order to purchase your home. Remember, if you need a second option on your loan estimate, send me an email below. I'd be happy to help you. Thanks for watching, and I'll see you on the next video.